Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. It is pleasing to once again look at this daily chart and find that the same basic drivers continue moving the market despite the occasional hiccup in the same upward direction. The rock of certainty has been anchored on the same few patterns. The middle time currently 17,145 and the upper time currently 2640 of the big 2017-2018 shallow bullish shift pitch walk, plus the middle time currently 19,645 of the October 2020 to March 2021 bullish shift pitch walk. It was also, as I said now, some 6 weeks ago, and I quote, "Whilst these two pitchforks are in operation, the market will still have the bullish incentive, even if it seems sometimes to be missing." This has gone a long way to mitigating the strange indecision we'd seen in earlier weeks, primarily with contrary key reversals. One final yet major point I'd once again like to recognize, and what has been important going forward, is the May to date rising wedge pattern, 18,470 to 19,120. Now, before I talk about this rising wedge pattern, I'll highlight two other key events: the weekly key reversal up 4 weeks ago, and also last week. These two continue to push the market up from not only the congestion between 18,400 and 19,070 dating from August 2014, but also breaks the market up and out of the rising wedge pattern. Now, you would think these two would carry the market higher just on their own, which it has done. However, the price for fully pushing the market higher has still not been paid. You see, overhead we still have the bearish pressure from the September and June 2014 highs at 19,940 and 19,995 respectively. These are the same two that kept the market back in late February at 20,110. This raised the question mark over the possible target's top side for the break up and out of the rising wedge pattern. You see, the initial target X is in the 2345 area, whilst the secondary target X1 is in the 2780 area. I raised this as an issue over the last 2 weeks, and it is still ongoing. This is a pair of big obstacles to overcome, so it is no surprise to see some reversion back down, as we have this week again. The question now is whether the bullish rising wedge pattern is going to still be enough to take us higher. There's plenty of ammunition below. The question though is it still enough? LME 3-month zinc. On the surface, this metal looked and looks like a gently rising market over the last few weeks, now months. Most notable features being a weekly key reversal up 5 weeks ago and an outside week 2 weeks ago. But not so. There have been and still are some significant forces at play here, and all is not what it seems. We have some strong undercurrents washing this market. First off, the 50% Fibonacci line of the 2006-2008 move at 2806 is key. The weekly key reversal down 9 weeks ago just proved that once again, as the Monday following that, prices bottomed at the 2806 level. Since then, we've seen prices move up along either side of the May 2020 to date broken but still potent uptrend, currently at 3053. Now, initially when this happened, I posed the question, what's next? Well, the action since the big fall in March looks suspiciously like a bearish bump and run reversal top. It's not perfect, but as time has gone on, I realise that this thing has taken way too long on the upstroke hesitation to be such a pattern. Therefore, I put forward the idea for another pattern type, a possible bear flag, or bearish measured move lower. Well, that also has taken way too long to be such a pattern. My thoughts in recent weeks have still been dubious about how the market moved up the uptrend. I recently clarified my thoughts thus. It seems to me that the market is currently trying to navigate up this uptrend, but it has at the steering wheel someone seemingly heavily inebriated, overcompensating on each day as prices generally move in the direction that is wanted. This is not safe, nor it can last. I would urge caution when the drunken driver of this market either stops or gets pulled over. End of quote. Hence, I then recalled that I had still left targets X1 and X2 on the daily chart. These were, still are I suppose, the initial and full targets for the diamond continuation pattern formed over January to March this year. You can still see the pattern over on the left. The market has already previously reached target X1 in the 1395 area, and I had previously expressed doubts about the market having the impetus to reach target X2 in the 3215 area. Indeed, I was about to retire these two, but I kept them on just in case. It now seems that maybe, just maybe, this action and pattern is gaining credence. That the diamond pattern from much earlier this year is indeed the driver for the recent moves higher, perhaps all other patterns since. They're all subservient to that core pattern as it moves the market up. I've been thinking about this and I still wish to ponder upon it some more, but this could be the reason why we haven't triggered a bearish bump and run reversal pattern or a bear flag pattern when we had the opportunity. Just be careful. I don't like drunken drivers or drunken markets either. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.